All right, guys, you can probably see the lovely lady at the top of the screen right now is Jacqueline Munro is here. She's from the Mad Hedge Fund Trader.com. And you guys met John yesterday. She's part of John's rogue group over there doing some good stuff. Now, Jacqueline began investing in the stock market in her 20s, focused on options trading. She achieved remarkable success by turning $5,000 into $2 million in just 2 years. That's pretty cool. She joined the Mad Hedge Fund Trader in 2010 as a senior trader, and she travels globally to share her trading and investment knowledge acquired over the last 3 decades. And today, she's going to be talking about crawling out of the crisis. So again, very topical conversation that's happening right now. Ladies and gentlemen, Miss Jacqueline Munro.
Hello, everybody. How are you?
Hey, Jacqueline, how are you today?
I'm really well.
Thanks for joining us.
Okay, I'm just going to get into my slideshow.
Oh, and by the way, Jacqueline was born in Australia. There's nothing wrong with your speakers. That's an accent.
There, that's my Australian accent.
Share your screen.
Where am I? Just give me a couple of minutes.
Take your time. We're here if you need us. Looks like you have some tech support there anyway.
Yeah, I'm just going to share my screen. Need that. No. So I can go to slideshow. No, it's not doing it.
Can you see my screen yet?
Can you see my screen?
Yes, we can.
Okay, I need to go to play from start. Here we go. Okay.
Perfect.
Thank you, Rod, for giving me this spot and the Fit Pub crew. It's great to be here. Hello to all the listeners. It's 3 a.m. in Australia. Nice, cool morning. I've got my cup of tea, something warm with me, and I'm ready to go. So I hope you're all doing really well. Okay, so who am I? I grew up in Toowoomba, Queensland, Australia. Toowoomba is Queensland's largest inland city, about 2 hours drive from the golden beaches of that state. It holds country charm and is known as the Garden City, with many parks and gardens and an annual Carnival of Flowers spring event. Okay, and I'm just going to show you. And this is the city. My childhood was about being active. I was on a swimming team and a tennis team. I did secretarial courses after leaving school and then was sent to the outback as a jillaroo. So here down at the bottom is the house I grew up in, and on the left are 2 of my pets I spent my childhood with. So Lucy is the dachshund and Pepper is the cat. And the Garden City of Toowoomba is really beautiful. September has the Carnival Flowers event, and it is truly beautiful. So I was sent to the outback, as I said, and apart from riding horses, mustering cattle, fencing, assisting cook, feed the jackaroos, I also helped 2 children with their schoolwork. Windora was a 1-shop, 1-pub, 2 tennis court town. For fun, we watched movies that were screened against the house and played polo matches on the weekend and enjoyed barbecues. No technology here, as you can imagine, but it was really good fun. So after that, I came back to, After that, I came back to the city and I got a job in the Toowoomba Hospital as an administration officer in the psychiatric and drug and alcohol unit. And what I saw there was enough to turn me off alcohol for good. I started studying for my Bachelor of Arts as a mature age student while working. And I studied for the next 10 years while working and ended my years of study with a Master of Business Administration. My mother introduced me to the stock market when I was in my teens. Her rule was really, really simple. Buy shares and never sell them. Never, ever sell your capital. Only use what the capital makes. So that's exactly what I did. I started buying shares in my early 20s. I held my stocks through every single market downturn. Yes, even 2008. At market bottoms, I just bought more. So now I advise others how to do this. And one of the biggest obstacles to successful trading is your psychology. After all, trading is 30% strategy and 70% psychology. And the tendency is to buy high and sell low when you should be doing the opposite. So fear and greed take over. But if you had someone telling you what to do and when to buy and when to sell, would that make a difference? So my learned skills gave me freedom. And this is what I was able to do. I was able to send my young son to school in the UK. And it's also given me the advantage of being able to trade anywhere in the world. So I take several holidays a year and trade overseas. As you know, trading in Australia is quite difficult because you sometimes have to be up in the middle of the night, although I tend to get up very early in the morning and put my trades on. And you also get regular income. So with the funds I made, I sent my son to a private prep school, boarding school in the UK, and it was called Ludgrove. And this is the school. He spent 5 years there and absolutely loved it. So this was his first day at Ludgrove on the left. He was 8 years old. And on the right is his final day. He was going on 14. And he finished in 2019. So here are the school fees at Ludgrove. £9,364, and they were paid 3 times a year. So why should you listen to me? I've got 40 years experience in the stock market, 10 years working with the Mad Hedge Fund Trader, 10 years experience running my own fund, and a Master of Business Administration qualification. And on the right is my qualification, my MBA qualification, and on the left and in the middle are 2 certificates to show that I topped the class out of 150 students when completing my MBA. And here on the right is a picture of the instalment receipt when I bought my Commonwealth Bank shares. You can see down the bottom there that part payment was $445 and the date is 22nd of July, 1996. The government public offer was for 399 million shares. Investors paid $6, with the remaining instalment being due on November 14, 1997. So that's when I purchased my Commonwealth Bank shares. On the left here is a picture of a share purchase plan application form. And you can see the date there. The offer closes on the 11th of March, 2009. And this was just after the 2008 crash. And I can always I posted my check on the 10th of the 3rd, 2009. And I always wrote that on my little slips of paper, so I knew exactly what I was doing. The issue price for Commonwealth Bank shares on that day was $26 per share, and I sent a check for $25,000. So that just shows you that I was actually taking what I've learned from the Mad Hedge Fund Trader and also listening to my mother, never sell your shares, just buy more at the bottom. So the share market, does it drive you crazy, or is it the actual people that participate in it that drive it crazy? So with the psychology being 70%, it's all about how we interpret the data. I mean, everyone has the same data that they see on TV or the facts about what's happening in the market, but everyone has a different interpretation of the data. And you bring your own biases to that data, and then you behave, some might say irrationally in the market. And this is what makes the market move different ways. So it's almost like a roller coaster, really, when you look at how the market moves. So the summary of sectors and economy, and this is what I'm going to give you when I'm talking about my product, Jackie's Post, which is a product in the Mad Hedge Fund Trader site. So let's go ahead and look at the market sectors and the economy. So, we're wondering, what will it actually be? Will it be, oh my goodness, my screen is moving. Oops, sorry. He's trying to land. Will it be a soft landing, a hard landing? Technology says a soft landing, but gold, commodities, energy, and industrials say a hard landing, and it's in the price. So are you confused? So what's going on in the markets? The debt ceiling has been resolved. Yay. Markets, though, are in high-risk territory. Volatility is really low, and it could go down to 12. So there's really nothing to do in the market at the moment. Bonds have given up all 2023 gains, and yields are back up from 3.3 to 3.6%. And there's been massive investment in T-bills. So it's a bit unbalanced at the moment. Investors are really not positioned for the next bull run in commodities, energy, and industrials, which will probably take off in the second half of the year. So all technicals have turned red, trading volumes are down, but summer will be a terrific time to start buying. So what's on our buy list? Precious metals and commodities. But just be patient and wait for the market to come to you. Don't chase after it. That's about the worst thing you can do, because then you end up buying on the high. So the global economy, the US economy created 339,000 jobs, new jobs in May, way above forecasts, underscoring the resilience of the economy in the face of rising borrowing costs. However, the unemployment rate, meanwhile, rose to 3.7 from 3.4. So actually, the labour market could be key. And will it spook the Fed into action? I mean, will it raise rates again at the June meeting, or will it pause and wait till July? That's why everybody's, spooked about what the Fed might do and just scratching their heads and wondering. So Fed officials have indicated that they may hold off on raising rates at their June meeting, while reserving the ability to lift at subsequent meetings if warranted. Global growth is forecast to slow to 2.7% in 2023 and then rebound to 3.1% in 24. And actually, this is the weakest growth profile since 2001. So that's something to think about, except for the global financial crisis and the acute phase of the COVID-19 pandemic. In 2023, economic activity is expected to stagnate. There will be rising unemployment and falling inflation. Interest rates are projected to remain high initially and then gradually decrease in the next few years as inflation continues to slow. Although inflation is falling, it is settling at elevated levels, and the exact path of interest rates going forward is unclear. The probability of a downturn in the US economy in the next 12 months is at about 50 to 60%, according to Goldman Sachs research. However, some rate it as low as 35%. China's post-COVID recovery was looking strong initially, but it has recently faltered. After the initial release of pent-up demand, economic data for April fell short of expectations. In response, Chinese stocks have faltered. Yields on government bonds fell, and the currency has declined. The currency's trade-weighted exchange rate is now as weak as it was in November, when officials were locking down cities. The overall effect of climate change on global growth will mostly be negative in the long run. Global warming will primarily influence economic growth through damage to property and infrastructure, lost productivity, mass migration, and security threats. The balance between winners and losers will also likely turn increasingly negative as temperatures rise. Fuel and food shortages caused by the war are exacerbating post-pandemic inflation that had already reached multi-decade highs in most of the world. The war has actually compounded the pre-existing adverse global economic trends, including rising inflation, extreme poverty, increasing food insecurity, deglobalization, and worsening economic degradation. So stocks are rising. The risk is rising incredibly in stocks. Markets are stretched, especially the tech. And basically, you've only needed to own 7 stocks this year, as the rest are really going nowhere. And these include Apple, Google, Meta, Amazon, Tesla, Nvidia, and Salesforce. We've actually been in and out of these several times this year. And that's basically why we've been up so much. But we know this narrative won't last forever. So you want to watch for the next rotation to broaden out the rest of the market. All technical indicators are turning red. I mean, you don't want to be buying tech up here. You want to wait for a 10 to 20% fall in the stock market, in the tech sector particularly. I mean, volatility is down to 12, going toward 12 and 13. So we want to wait for, the first half has been really flat, and we want to wait for a strong second half to take us up to 4,800. So we're looking to actually position now, and the positioning should be, taking your money out of bonds and positioning for industrials and commodities and the gold and silver sector. So this is the portfolio, I would advise if I was wanting to build one. So AI has been all the hype and all the craze. I mean, it reminds me a little bit of the crypto sector. Too much hype for me, but everyone's into it. So you need to look to add Apple, Google, Amazon, Tesla, Nvidia, Salesforce, but only buy these on dips. I mean, wait for at least a 10%, 5% dip. Oil and gas, you need to look for UNG and taking leaps on that. So that's just like a call, except taking it, 1 year out. Commodities by Caterpillar, Freeport-McMoRan, and US Steel. Precious metals, you want to buy gold and silver, which is set for a rally, although we could see gold fall a little further before the rally, the long-term rally starts to really kick in. You want to buy gold, SLV, and Wheaton precious metals. Currencies, the US dollar rally is temporary. So you really want to wait for the rally. I mean, the US dollar could rally still a little bit further, but you basically want to start positioning yourself into the Australian dollar, the euro, the pound, the yen, and the New Zealand dollar. Real estate, buying residential real estate is a great idea. It's a long-term asset, but I would avoid commercial real estate. And bonds, you want to buy TLT calls, call spreads, and leaps on dips. But I would actually wait for bonds to, just pull back a little bit further before we jump in there. So the VIX, the volatility index, look where it is, under 14, going toward 13. I mean, this is a time where you really need to hold back on doing anything in the market. So just take 5, do some research, and stay away. Here's the S&P 500. We're looking for a pullback of a higher low, and then would jump us to a new high of 4,800 by year end. I mean, the worst case scenario is we pull down to 355, but that's, we don't know what might trigger that yet. So it's really a battle between the bulls and the bears at the moment. Here's gold. The prospect of interest rate rises caused gold to drop initially, but, we expect gold to run up to 2,300, around 3,000, with the prospect of falling interest rates in later this year and next year, and the demise of crypto. I mean, what's happened to crypto? We're going to be going back to break old highs, and you'll see a huge explosive move eventually. So, I mean, I'm hoping that actually that we'll get back to the 200 moving average, about 170, and I'd be jumping in with both hands then. Barrick Gold, if you like gold, you want to buy the world's largest gold miner, which is Barrick. We see Barrick moving to at least $50 by the end of 2023, and that's around a 230% gain. Wheat and precious metals is another great play here, but just buy it on the dips. It'd be great to see it at 40, and then I'd be buying with both hands. Silver is beating gold as massive new industrial demand kicks in from several sources, including solar and EVs, and it's also a China recovery play. Silver is now an industrial commodity, while gold is still a precious metal used for jewelry, investment, and central bank reserves. So a massive silver shortage is developing with demand of 1.2 million ounces for EV production. So 1.5 million panels to 20 million panels a year for solar within a decade. So EV makers and solar makers are running up against huge supply shortages. And to meet this ambitious production forecasts, these metals productions will have to triple quickly. So you really want to be buying copper, aluminium. I know you say aluminum in the US, but I don't know how you say that. Silver, chromium, and lithium. Russia and China are still stockpiling gold to avoid Western sanctions. So, you know, all these things, silver, gold, chromium, aluminium, and copper are great plays. So we go to bonds. Okay, so the default risk is behind us, thank goodness. And last Friday, yields rose after the strong jobs report. So, you know, all the market is wondering, are we going to get a rate rise in June? And this is what's making them, all the market and the sectors, jump about. So many of our clients have jumped into 90-day T-bills, and that's where all the cash is sitting. So it's very lopsided in the market at the moment. But we're looking to buy back into TLT down at 100 or even 95, around that area. So TLT should reach 120 in 2023. And we're telling people to keep buying TLT calls, call spreads, and leaps on dips. You can also look at junk bonds, is another way to participate with a much higher yield. So you can look at JNK and HYG, great high yield plays. And this is the 10-year Treasury yield. Okay, it may even go up to 3.8, 3.9, or even 4, and you get a really nice double top up there. But we're expecting this yield to peak out at those extreme prices and fall to 2.5 by the end of 2023 or even next year. So this is the NASDAQ, and hasn't it had a huge run? I mean, it could even keep rising. I mean, it's overstretched now, but it could keep rising to even around 15,000. But we're looking to get back in lower. That's why we're waiting for even a 10% dip, even 15 to 20% would be nice, but we're waiting for quite a sizable dip to get in there. So this is the QQQ, the tech index that holds all these wonderful tech shares. Very stretched at the moment though, and you know, we wouldn't be getting in here, waiting for a nice pullback to get in. So Amazon, has a huge global online sales presence, as you know, and we're actually looking to buy on the dip here. Look how far it is stretched at the moment. But you know, it's one of the tech shares that is a major player in artificial intelligence, which, as we know, has become the theme of the year. And here's Microsoft. It's a big leader here. Accelerating economy means more PCs and operating systems. They're also moving big time into the cloud with their Azure service, moving to subscription services. I mean, we're looking for 400 plus or even 450 by the end of the year. And I mean, that's even being conservative. Onto Apple, it's a huge cash machine. It's got 250 billion in cash, and it's a major buyer of its own stock. We're targeting 250 by the end of the year, and that's being conservative as well. I mean, Apple's gone into health now. You can monitor your glucose level if you have diabetes on your phone. It has the Apple Card with a 4.18% interest rate, And you also have Apple AirTag you can put in your suitcase when you're traveling. So you know where your suitcase is, or you put it in your car if your car's stolen. They also have the Apple Vision Pro headset, and that could soon account for 10% of Apple's earnings. So it's definitely a stock to have in your portfolio. Tesla, oh my goodness, it's amazing. It's an amazing stock, and we love Tesla here. But it's been in the middle of a price war, but they are the overwhelming dominant leader in EVs. And Model Y became the world's top-selling car in the first quarter. So if you include the federal subsidies, Tesla now holds the #1 and the #2 car spots in the California car market. We bought it at the 105, 110 level, and our target for the year is 300, but I'm sure that's ultra conservative. And I mean, you know, Elon Musk is targeting 1,000 a share in the next few years. And I mean, we even could see 10,000 a share over, you know, 5 to 10 years. US Steel, we're moving in the commodities section. It's a play on the commodity boom, and it's actually a wonderful stock to own. And it's actually in buy territory now. Sorry about that. So this is one sector that we want to try and get people out of, you know, cash and into this sector, which is going to boom. So Freeport-McMoran is a play on the coming copper crisis. You actually need 200 pounds of copper for every EV, and there's virtually no new supply coming on stream. So nobody's invested in copper for a new copper production in about 10 years. So that is in buy territory. Caterpillar is a play on infrastructure development and housing and agricultural investment. It's in buy territory now, and it's raised its dividend by 50%. So it's actually a really good stock to play now and have in your portfolio. Cameco is our uranium play. We want you to accumulate that on dips. This is going to be a long-term play, and the US government is about to become a major buyer of uranium. Nat gas. This is a great trade on natural gas. We want you to start positioning yourselves into natural gas, and we're looking for a move to $15 later this year or into early next year. But beware, it could go even lower before it starts to rally. Berkshire Hathaway, it's a one-stop barbell portfolio. I mean, it's the one to own. It's strong in industrials, a big owner of banks. I mean, you have to have that in your portfolio. And it had great earnings in Q1 of 12.6%. So here's the US with the Australian dollar, sorry. I mean, the US dollar will rally a bit further, but the prospect of interest rates rising is putting some juice under the US dollar at the moment, but it's only temporary. So once the US dollar starts to fall, these will be the currencies to buy. And we're expecting eventually the Australian dollar to be 1-to-1 against the US dollar. So you want to buy the Australian dollar, FXA, and that's our $5 note in Australia, FXA. You want to buy FXY, the Japanese yen. We're targeting 25% in 2023. You want to buy the euro, which is FXE, and we're targeting 25% there. You also want to buy the British pound, and we're targeting 15% there. You know, the war in Europe has taken away a bit of their juice, so not as high there at the moment. So people often ask me, what is a black swan? And, you know, you can think of the tech wreck in 2000 and 2001 and 2008 being a black swan, and also the pandemic as being a black swan. It's an unpredictable event that is beyond what is normally expected of a situation and has potentially severe consequences. Okay, so people always ask me, what's my life look like? I mean, what is it like to work for the Mad Hedge Fund Trader? So I travel where I want, when I want. I trade on my iPhone on the move. I support subscribers with their trading, and I earn a living from trading. And I also have my portfolio, which, as I've told you, I've kept since my late 20s, and I've just kept adding to on every market downturn. So this is my son. We went for a holiday at Lake Tahoe several years ago, and this is my son looking out across the lake toward the snowy mountains in the background. Absolutely beautiful day, beautiful place for a hot vacation. So this is some of the places I've been to when I've been traveling all over the world. On the left, I was hiking in Switzerland while my son went to a language camp, which he was learning French. He's actually learned French since he was in year 3. So he was at a French language camp while I was hiking in Switzerland. In the middle, I took my son to the Solomon Islands to show him what it's like for, not to have a bathroom, because these people here don't have the traditional toilet and the traditional bathroom. So I wanted him to show how these people live. And on the right, I'm checking my trades as I lunch out beside the Thames in the UK. This is when my son was at school. So I want to ask you, can you manage your own money without direction? I mean, can you do it? Do you know what stocks to buy? Can you put a trade on? Do you know when to put it on, when to take it off? So over the next 10 years, the investment space will look dramatically different, especially with all the technology advancements that'll happen with AI and all that area. So will you be able to confidently identify winners from losers? Do you have access to all the latest sector and market updates on individual shares? And would you like some help? So this is what Buffett says about cash. Today, people who hold cash equivalents feel comfortable, and it does make you feel comfortable, does it? You can see it there. But he says they shouldn't. They have opted for a terrible long-term asset, one that pays virtually nothing and is certain to depreciate in value. So are you supposed to listen to Buffett, or are you supposed to feel comfortable? Think about it. So if you're going to do it on your own, sometimes this is what you'll see: a big red patch of red on your screen, all in numbers, all in, direction, etc., etc. And I mean, all it does is make you like a bear with a sore head, or you have tears rolling down your face. So, the fact is, would you rather be like that, or would you rather have sort of cash coming in and feeling more comfortable? Or would you like financial independence like me? You can quit your job, or you can keep your job and do this as a part-time job. But you can trade anywhere, anytime, and you can supplement your retirement income by booking, winning trades, more winning trades over the long term. I mean, you can do this for several years, not just 1 year. And that's my son running across the beach in Dubai when we had a trip there. So this is what you have to swallow: the naked truth about trading. 1% of all traders can profit net of fees. So, you really do need some help. Most traders lose money, but they lack the correct discipline and training. So Wall Street is about squashing and quashing the novice. And the secret is to get educated, and let us help you be on the winning side for the long term. So I want you to let a pro guide you through the maze of the market. So let me guide you into winning sectors. Let me guide you into winning trades and stocks, and let me boost your income. I mean, when you go into a maze, what's the probability that you're going to get out of it? So here are the returns from the S&P 500 index from 1915 until 2019. I mean, look, do you see a lot of green there over the long term? And there's not a great deal of red. So here on the right, stock market facts, and that's what I like to see, facts. The average returns from 2012 to 2021, the average stock market return was 14.8% annually for the S&P index. So if you buy and hold, investors are far more likely to earn the best returns over long periods instead of jumping in and out, in and out, in and out, trying to trade it. I mean, you can own a stock portfolio and keep adding to it on dips, but side by side to that, you can also trade the market, but you probably need help to trade it and pick when to go into the market and when to come out of the market. So if you had $1,000 and you had invested it 10 years ago into these stocks, look what you would have today. I mean, look at Amazon. You'd have $12,398. Apple, you'd have $6,228. Starbucks even, $4,689. I mean, look at Netflix, $51,000. FedEx even, and Microsoft, over $2,000. Well, here on the right, we went into NVIDIA at $38 in 2016, and it went up 175 times. So if you'd put $1,000 into NVIDIA when we started trading it in 2016, imagine what you'd have today. The same goes for Lam Research, recommended at $51. It's gone up 10 times from 2016. Square was recommended at $10 and it's gone up 25 times. Moderna was recommended at 15 and it's gone up 40 times, and we recommended that in 2019. And Tesla was recommended at $2.35 and it's gone up 212 times, and we recommended that in 2012. So you can just think about that. If you just bought those stocks and held them and then traded in another account just side by side, I mean, you'd be in a wonderful position today. So technology will be the supercharger, and it will impact all sectors in the future: health, finance, transport, agriculture, housing, retail, and so it goes on. Quantum computing will have huge impacts on the tech industry and the world. So here we have a few things that I've listed that will be happening now and in the future. Anybody heard of necrobotics? It's turning dead things into robots. I've never heard of it myself, but somebody has turned a dead spider into a robot by pumping it with air, apparently. We'll have 3D printed bones, 3D printed cake, 3D printed eye tissue, and boom-free supersonic flight. Who wants to fly from London to New York in 2 hours? Me. Energy storing bricks, great for the environment. Artificial neurons on silicon chips, internet for everyone. And, you know, health, the advancements in health will be incredible. They'll find cures for all sorts of diseases, and there'll be advanced farming practices. And I mean, how we live and where we live will change enormously. I mean, apparently we'll be flying around in these mini little aeroplanes all over the place. Also in the pipeline is an energy grid, a power grid to span the world. So imagine that, a power grid to power the whole world. That would be amazing. Oops. So I also give you in Jackie's post, John's approach to the markets. I explain John's philosophy, how he approaches the market, identify key details in John's trading. So he tends to buy when there's blood in the streets and sells when the market is frothy. So when greed is apparent. And he buys when the VIX is over 30 and always enters the market with a limit order. So stock market terminology, does it drive you crazy? Do you understand it all? I mean, you don't need to understand it all. With us, you can learn it as you go. and we will provide definitions on every stock market terminology. So John holds a webinar once every fortnight, and I summarize that webinar and the main points and send it out in a post. And this is what the post would look like. It'd have the date, the title of the webinar, the performance data, and all the main points that he summarized and spoke about in his webinar. Trade alerts. I send out, and Jackie's post sends out between 2 and 5 trade alerts per month. And I always liaise with John before I send out a trade to make sure it has the best risk reward. So you get the trade, the ticker symbol, the expiration date, the portfolio weighting, the number of contracts, and an explanation of why the trade is a good idea. So success in trading depends on discipline, and it really starts with discipline. So what does it take to be successful in trading? There are 2 sides to effective trading and making money: technical analysis and your psychology, your mindset. The knowledge of how to read a chart and use indicators is very important, but also equally important is your mindset. You might have the knowledge and all the money in the world, but without the correct mindset, your success in trading, sorry. Oh, I just want to go back. Your success in trading may be limited. The good news is you can learn this. So what's your mindset going to be like? You need patience, focus, intuition, and discipline. You need all those to be successful in trading. So everyone has a different trading philosophy. Are you a trader or an investor? Do you like to trade long-term or short-term? Are you a day trader? Do you like to enter trades at the market open or at the market close? Do you like to swing trade? Do you like to trade the indices or single stocks? Some subscribers choose to trade a single stock, such as Tesla, and that's it. Others focus on a single sector, such as bonds. You and only you can decide how you want to trade. I'm also setting up a buddy system. So peer-to-peer help to support and keep you committed and continually improving. I find this peer-to-peer system helps to build your confidence and increases your understanding of the content. You become more engaged with the subject matter because you are in a relaxed environment. It also fosters connection in the community. Here you are not afraid to ask any questions, whereas in a formal environment, many people are scared to ask their questions for fear of appearing stupid. Staying ignorant is stupid when you have an opportunity to ask a question without any judgment. So the buddy system is designed so you can improve over the long term and ask any questions that you like, doesn't matter how silly you think they are. So teaching the basics goes back to the facts about the markets and trading. And so it follows on from the peer-to-peer tutoring. We give the facts about trading the markets are shared, not silly stories that keep people away from the markets because they think it is too hard for them to learn. So here I am on the right, catching up with clients and subscribers. On the right, I was in London, catching up with a lovely subscriber who's become a good friend of mine. And on the left, I'm in New York, catching up with also a fellow subscriber who is a lovely friend. So also here with Jackie's post, we're going to hold social events twice a year. What it's about, connecting like-minded people and celebrating success and encouraging each other and sharing experiences. So in my newsletters, I use quite a few quotes and cartoon pictures to communicate information and points I like to get across. So I'd like to draw your attention to these 3 quotes and consider what is the one thing that stops you from doing most things. Most of the time, the answer is fear. Most people are frightened to fail or frightened to spend the money in case they lose. And that brings me to mindset. A strong mindset would see this as an opportunity, which then brings me to hold up the idea of choice to you. Right here, right now, you have the choice to stay where you are or to step outside your box and change how your life looks. Take a different path. You are in control. Only you can make the change. Are you going to be the master of your money, or are you going to be the slave to it? I'll let you think about that. So here's a testimonial from one of my subscribers in Australia, and I'll just quickly read it out. I've known Jackie Munro for a period of over 7 years since I first met her at a Sydney luncheon with John Thomas. At that time, she became known as the John Thomas Mad Hedge Fund Trader contact person in Australia. She was very helpful in assisting me access to the various trading platforms that John Thomas uses to trade his text alerts. I joined Jackie's post from day one and attended many of her Zoom conference calls. I have found Jackie to have an excellent knowledge of all financial markets and has a friendly, plain-speaking way of explaining the various market opportunities. She talks from experience and will educate you how to shut out the noise and focus on the opportunity at hand. Jackie has guided me through many successful trades and that I am forever grateful and hope that one day I may well emulate her financial success journey. I can highly recommend her to any investor, whether experienced or just starting out. So what you receive with Jackie's post: 3 newsletters a week, summary of John's webinar, sent out once per fortnight. Specific trades will be shared when the risk reward is in your favor. Monthly Zooms. I think I skipped over that. I do apologize, but I will be holding monthly Zooms to share ideas, experiences, and ask questions. And it is also a great idea to get subscribers together and build the community so they can each talk to each other about their experience in the market. And it doesn't matter if you're even not trading, it's just to be able to listen to other people who trade and you can learn from them. The buddy system, the peer-to-peer learning, increases understanding, builds confidence, fosters connection in the community. Twice yearly social events in different parts of the world. So I'm considering one later this year in the US, maybe in September, and one in Australia next year, maybe about March or April. So can you guess what this chart is? If you subscribe today, you'll instantly receive a trade alert to your email and you can enter this trade. But can you work it out what it is? It's a mystery. So you have to subscribe. So your price for today is only $2.29 for 6 months. That's actually 70% off our regular price on the website. There's limited places available, so click on the link in the chat box on the right. I'd love to have you be part of our community. So take a step and change your life. $2.29 for 6 months is a great price. All you have to do is click on the link in the chat box on the right and it'll change your life. Join our community, learn about the markets and how to make money and boost your income. Okay, that's it for me. So now I'm going to look at the questions in the chat box. And let's see if we've got people coming in. Let me see.
Hey guys, if you have any questions, this is the moment. I think these insights are really, really valuable for someone who has a lot of experience in the market. So don't hold yourself back. Please.
Okay, I've got a question.
I think there's some questions here from Johan.
Yeah, let me just have a look. Let me see. Just looking here. So does your service just include stocks or does it include options and futures? Okay, so we provide stocks, options and futures. So some are experienced, some are inexperienced people. So we allow you to just buy the stock, or you can buy the stock and do the option and do the future, or you can just do the option plays and not buy the stock. So it's totally up to you. The ticker symbol for uranium, I think it was CCJ. Let's see. Thank you, Hillary. Thank you for the compliment. Very sensible and confident. So we only start really to buy for the technology in the VIX when the VIX is over 30. That's really our rule. We only really enter trades when the VIX is over 30. Usually when it's going down to 12, there's really nothing to do. So how many trade alerts do you send out a year? Well, Jackie's Post sends out between 2 and probably a maximum of 6 per month. And I always liaise with John before I send those out to make sure there's a great risk reward. Johan is asking if we continue, will that rate be grandfathered in? Yes, the rate will continue at that price. So that's what you will pay, $2.29 as you renew. That's fine. Let me see. Do you use AI to recommend trades? Yes, we do, both on the indexes and individual stocks. And as I've just said to Johan, the price after 6 months does not change. You are kept at that price. And we actually have many, many clients who joined much earlier and are still trading, continuing with us at that same price. Okay, let me see. We've got several buyers coming in. Let's see. Jay from St. Petersburg, Florida. Hi, Jay. There's a trial period. You can trial it for, I think, a month. And then if it's not for you, we will give you your money back. Let me see other questions here. Can beginners do this? Of course, and that is the purpose of the buddy system. And that's why I had a vision. My vision was to incorporate the buddy system for this product, because I know that many people come in and they say, oh, I can't do this, it's too hard. And so I wanted to be able to partner up beginners and people that aren't experienced with experienced people and be able to ask their questions and not feel silly about asking any question they like, and be able to be helped and guided along the way. And also, if the person that's experienced is agreeable, I'd like to be able to think that they would share their phone number with the buddy that they're coaching along the way. And that's why I also have the Zoom meetings once a month. It enables all the subscribers, all the clients to come in together and just share your experiences and listen to others talk about their experience in the market, or talk about their experience with a particular stock or a sector, and advise others what they are doing in the market. Are they doing options? Are they doing leaps? Are they doing front, 2-year leaps, 1-year leaps? What sectors are they playing? All these different things that you can discuss in a Zoom meeting, which I'll provide. That's what I wanted to facilitate with the buddy system and the Zoom meetings. And then with the social get-togethers, then you can all get together and share in a social scene all your experiences as well, but let your hair down a bit. You see. So yesterday, Mad Hedge Fund Trader, what is the difference, your course about him? So my course is just about adding a little bit of extra spice on top of what John, gives to his clients. So he gives out trade alerts. He has the webinar once a fortnight, but I'm about creating a community and bringing the community together and being able to access and get those people talking and learning about the markets and bringing more of the psychology into the play on the markets and how important it is. So that just that little bit extra. Okay, I think that's just about it for me. I think my time is up. So thank you so much for listening. And thank you, Rod and the FinPub crew for having me here. It's been great to share my knowledge, and I'm wishing you everybody a really great day. I'm going back to make another cup of tea at 4 a.m. So I think I'll just listen to the birds and have another cup of tea. Thank you.
Thanks, Jacqueline.
Thank you very much, Jacqueline.
Thank
I
you.
love the presentation and the insights. I was just writing down all your recommendations. So